good afternoon, everyone, and a very warm welcome to day three of Gold Loan Week powered by Qualtech. We are very happy to have you here with us today. Qualtech is one of India's leading lending technology providers. We work closely with lenders across the country, and Gold Loan Week is really an extension of the real on-ground conversations we're already having with the industry. Over day one and day two, we had a fantastic start with a business roundtable conference and a fireside chat. We heard refreshingly honest leaders on what is truly unfolding in the gold loan space today. And one insight stood out very clearly. Technology innovation in gold loan operations is no longer a choice, it's becoming essential. That's exactly what today's session builds on. Today, we move into a presentation on conquering the final innovation frontier in gold lending, where we will explore what it really takes to scale gold lending in the next phase. I'd now like to introduce you to the speaker today. We have Mr. Sundeep Shenoy with us, Gold Loan Product Head at Unity Small Finance Bank. Sandeep brings over 2 decades of experience across secured and unsecured lending, spanning both NBFCs and small finance banks. As a thought leader in fintech, he had played a key role in pioneering technology-driven solutions that help lenders modernize gold loan operations while reducing risk and operational costs. He also has a strong track record of building gold loan products from the ground up, including setting up integrated LOS and LMS across both NBFCs and SFP environments. Thank you for being here, Sandeep, with us today and showing such commitment when we know you're not that well. That really means a lot to us. With that, I would like for you to take over and go on with the presentation.
Thanks, Shweta. So I'm going through a bit of a bad cold and cough, so please pardon the cough. Now, coming to gold loan, so basically this whole session just came up as a brainstorming idea one day that what next can happen in gold loan in terms of technology, and that one discussion one evening has culminated in this presentation. All the thoughts in this in terms of technology are my own, and it's my opinion where it will go and how the market will go probably over the next 5 years, 3 to 5 years, we'll see which way the market is going. Now, coming to gold lending business, everyone has seen that last 1 year it's grown almost by 125%. We talk about the large market size and the steady growth in last 10 years and all. But what we kind of miss is the amount of gold that is there in India. Household gold is estimated to roughly about 25,000 tons, and that is roughly a 350 lakh crore kind of value. So when you look at it, we are only at a bare minimum of it, where we have lent against a very small minuscule 5-6% of it. So there is a lot in this growth story. There is a lot more potential, and as we grow ahead, I think gold loan is one segment which is going to become the preferred lending option for MSMEs, majorly for MSMEs and micro enterprises. So if you see gold loan over the years, okay, so when we started gold loan way back in 2010, in one of the NBFCs, Finance, we literally used to have a physical file where all the physical documents were kept, right from the application form to the multiple slips to the gold pledge receipt and so on and so forth. And today, if we see, more or less the entire process has become digitized. We have the onboarding process with the Aadhaar stack. You have eKYC, video KYC. Signing of documents has become very simple through one OTP, through e-sign. The maximum documentation if that is there is just the gold pledge receipt, which that also quite a few lenders have started digitizing it, or some are giving it in a physical form just to keep that touch and feel. Okay. Now, in terms of eligibility checks, LTV rules, all the LOS that have got automated, and this is earlier what was done manually is completely now system driven, right? So all these and literally today you walk in to take a gold loan, you can walk out, and by the time you walk out, money is credited to your account. That's the kind of technology that has come into the gold loan process. While this is at the customer end, even at the back end in terms of risk monitoring, margin tracking, margin alerts going to the customer, how branches operate, or vault processes are done, and how audit process have started using technology. So more and more everything is getting automated. But what is it that still remains not automated, still is physical, is the gold valuation. So one of the risks that you carry in gold valuation is it's incorrect gold valuation, right? Now it could be unintentional, where a person is just new and has not learnt it well, or it could be intentional, where there is some kind of collusion happening, or you just want to give more amount to the customer, or so on. Now, gold valuation even today in most of the NBFCs is done by individuals who are the employees of the company, and they are doing the valuations themselves. And in banks, it's done majorly through external valuers who are empaneled with the bank, and they are doing the valuation. So the valuation is still a physical aspect. Physical now, because it is people who are doing the valuation. Of course, there are certain mitigants which are put in place, like for certain valuation, there is dual valuation. There could be valuation done by the supervisor also and the CSC also. Physical audits are there, where auditors come and do a packet audit where they check the valuation, audit of the valuation as well, right? But in spite of all this, there are risks that collusion can happen. It's ultimately a subjective. What I say is 20 carat, someone might feel it's 21, and someone might feel it's 19. So it's always ultimately a human judgment. And of course, it's a high OPEX and labor intensive kind of a process. So how do we solve that? So what is the key? What if we have a fully automated gold valuation machine? Okay, right, where instead of today rubbing the gold on the kasauti and then putting acid and checking, I'm able to place the gold in a machine, and automatically it will tell me what is the carat, what is the weight, right? And it will be an instant result. So there is no time taken. It is not destructive. Today, when you rub a gold, end of the day, that gold, you're losing some gold on that stone. But here it's not destructive at all. It will reduce, it will completely eliminate human subjectivity, because now the machine is giving that answer, right? It's not possible to do fraud, right? Because when the machine is giving the output, that output will directly be linked to your LOS system, whereby the data will be inputted. So there is no way you can change the output at all, right? And there is consistency across all the branches. Across branches, you have a consistent consistent experience being given to the customer, and of course it will reduce your overall operational cost, because you will be able to handle more customers. Now, is this possible? Yes, technology is there. Today we have three distinct technologies. We'll go one by one. The first is specific gravity method, where typically you keep gold in distilled water, and it will the machine will compare the density of the gold, and basis the density of the gold, it will tell you how pure the gold is. Okay, so these machines are available in the market. There are some players who are using it. Then we have XRF spectrometry machines. Here basically these are laser driven, where the laser will penetrate the top layer of the gold and analyze the purity of the gold and give you exact how much pure the gold is. These machines are today available in the most of the high-end jewelry stores are using these machines, whereby when you go, they'll use an XRF machine to show you the quality of the gold. And then we also have ultrasound machines which use sound waves to test the gold items. Now these machines are typically used for thicker items like gold bars or gold coins, where you don't know what is there exactly inside. So these kind of machine, this technology helps you in evaluating such gold items. However, each of them have their own pros and cons. Again, advantages: non-destructive, no chemicals, instant result. They are more effective in detecting if there is a hollow or there is wax inside the metal. So these kind of things. What are the limitations? Now, when you come to specific gravity, tungsten and platinum are two items which have very near to gold as specific gravity. If gold is 19.8 something, tungsten is about, I think, 20 point something, and platinum is about 21. So they're very close to gold. So is it possible someone can build an ornament which will pass through as gold in this? Is it possible? Possible. Where will they get tungsten for it? I don't know. Platinum still available, but does it make sense? Cost of platinum wise, how much it is? So there is a lot of. Is it possible to beat the machine? Yes, it is possible. Theoretically possible. Practically, maybe not so. And again, this machine is not very reliable when it comes to lot of stone ornaments. If there are a lot of stones, then the machine is likely to not give a very accurate result. Then we come to XRF machines. Now here again, advantage is the same: non-destructive, no chemicals required, accuracy is high. Its complete machine will give a straight printout, or it will just pass the data to your LOS saying that this much is the gold, this carat gold, this much is available. What are the limitations of XRF technology? So XRF generally does a surface analysis, so which goes up to 10 to 15 microns. There are some more machines which come up to 30 micron, but the more the thickness it can penetrate, more expensive will be the machine. So if we take about on an average about 15 micron, then is it possible that you have a very thick plating of gold that may go undetected? Possibility, yes. Probability, less. Right? But possibility is there. And on an ultrasound machine, again, it's not suitable for testing jewelry, which is very thin. Right? It's more used for coins and gold bars, which currently we do not accept when giving the loans. So ideally, we would want a mix of technologies. So are there any startups out there which are working on it and building something which will use a combination of 2 or 3 technologies along with AI? Okay, so it's not just one technology you are using, but multiple technologies, so that you get a complete holistic view on the gold. So whatever are the shortcomings, so if let's say for example, if certain gold has a very high thick plating which is more than 15 micron and XRF can't detect, maybe specific gravity can detect that gold. Or maybe where specific gravity fails, where the the weight is more or less similar, tungsten or maybe titanium is being moved, XRF will be able to detect. So can you build a combination of these technologies and use AI for pattern recognition? That over a period of time, once you start using technology to evaluate gold ornaments, okay, there are different kind of ornaments which are going through different year. And obviously when we go to use the new technology, we'll always be doing a manual check as well, till the time you get some data which confirms that okay, the machine is more or less in sync and is not way off, right? Because you don't want the calibration. To calibrate the machine also, you'll have to do extensive testing. So the more data you have, the AI will be able to tell, okay, this type of bangle, this type of design, likely maximum carat would be probably 21. So anything more than 21 is probably a risk. So things like this can be done. What does it give benefit? Real-time verification. Customer comes, you do the initial quick data entry, and you immediately do the valuation then and there. There is no time, there is no need to wait for the valuer. There is no need to say if there is in-house valuer, he is busy with some other customer. Anybody can use the machine, do the valuation, and close the case. It's seamless integration with LOS, LMS, core banking systems and all. So the data is now moves from a manual input data to a system-driven data. I mean, there have been multiple incidents in audit where stone weight was supposed to be 2 grams, by mistake it was entered as 220 grams. Such kind of mistake, or the other way around. So these human errors happen. Ultimately, if we are human beings, we are bound to make some errors. Then, how do we handle it? While yes, technology is good, but at the same time, there will be some odd cases which will be edge cases where you will need manual intervention. So how do you build your AI such that it intelligently handles those cases, removes those cases, and lets human eyes look at it? Okay, and with all this, it gives a lot of comprehensive analytics, because now data at gold ornament level is getting digitized, and that data can be used in future to get more, to improve your overall lending processes, to improve your what kind of collateral you say, to put in early warning signals, to study over a period of time what kind of ornaments go in fraud, how is their typical makeup in terms of the combination of items that are used and so on. So this is what is I feel is an ideal automated gold valuation solution. right? And Qualtech is one partner who's thinking on moving on those lines and doing tie-ups to build something like this, which I think if something like this is in the market, it will be a big help to a lot of banks and NBFCs who would want to go ahead with this kind of technology in future. To just to let you know, already there are startups which are working on this. There is one startup I know of which is using XRF technology and has made a anytime gold loan kind of ATM kind of gold machine where you put in the gold, you do all the entries, and the money is sent to your account. And the gold is packaged and kept inside the machine till next day it is vaulted. Right. So these kind of machines are already being built. Someone is building on a machine whereby you do valuation by hand, but it gets recorded and that data recording is available, and the entire process of valuation gets recorded. So things like this. So a lot of people are trying different things, but I guess as we go ahead, we'll have more and more. I'm sure more startups will be working on building the technology together. But I believe that if you mix couple of, you're able to combine two technologies, two or three technologies, and then work around it, then we can get a good foolproof gold valuation, automated gold valuation solution. Coming next, what is the next risk that we have? Typically, stolen gold. Now, this is the next big risk which is there in the market, right? We have all, most of us have seen, right? You give a loan and then suddenly one fine day the cops will come and they will just take the collateral away, and from being a fully collateralized loan, you move to a zero collateral loan all of a sudden, right? That happened with most of us who have been in the gold industry. We have seen that. And how do we assess that this is stolen gold, right? It's highly subjective. Again, we how do we do? We do kind of how do we do that? So if you see, typically what do we do? Like I said, collateral value becomes zero, right? What is our mitigant? We have insurance coverage. That insurance coverage is available, but it's very, very expensive. So it's not does not make sense to go for an extensive insurance coverage. And there is limitations to how much you can detect. Typically, how do you identify stolen gold? You look at two aspects. One aspect is profile of the customer. If there is a profile mismatch in the kind of jewelry that you are getting vis-a-vis the profile of the customer, what work the customer does, where does he stay, if there is a huge mismatch, then you can identify that there is potentially a risk that this gold does not belong to him, and you question further in terms of how the customer got the gold. Second is body language. Right? How the customer is behaving. Is he sitting confidently, or is he looking fidgety? He's looking here and there, trying to urge to do it faster. He wants to go, really rush out. You'll typically he or she will come during the evenings, okay, when the staff is also in a hurry to close the branch. So these kind of things, so it's more of a behavioral analysis that you do of the customer to kind of identify this customer potentially be pledging stolen gold. So one is the profile aspect, and second is more of the behavior of the customer, which the frontline staff is able to identify. Now, risk with both these things is it has its limitation. Now if a frontline staff is there, then that person might be new, might not be trained. Someone might be 5 years in the industry, someone could be just 5 months. There will be difference. So these kind of limitations are there. So what if we are able to leverage AI to catch these customers? Okay, identify this gold. One is you have something called as there are sentiment analysis engines available today. These are ready-made engines which are available in the market. There are various models which are available in the market, whereby you see the customers, read the customer's face. So imagine there is a camera being put there which is reading the customer's face continuously, and based on customer's expression, tell if he's worried, it's a different thing, but being afraid is a different thing altogether, right? So something like this where there is the AI-driven sentiment analysis engine which is continuously looking at the customer's behavior and making a point towards it. Okay, and recognizing it and identifying it, whether it is in the range where it is a risk, or is it, is it acceptable risk, or is it a risk where we should not go ahead, or is it completely green. Okay, this removes the human subjectivity. Okay, the person sitting at the table might be someone who is new, but the AI is more model driven. It is the more intelligent, more it learns, the more accurately it will be able to predict. Add to it the application score. We make a scoring model for the application based on the customer's education, based on his overall persona, like what is his age, what business is in, what is his income, what is the amount of gold loan he's taking, what is his CIBIL record looking like. So basis all that, you arrive at an app score, and with that app score and this sentiment analysis together, you can do a scoring which kind of grades the risk, whether it's acceptable risk, or is it all good to go. So slowly, to identify these stolen gold, which is the second biggest risk, you can use technology to predict. And over a period of time, over a period of next 1.5, 2 years, when you'll have the feedback coming that how much stolen gold, when some gold might still come through, but then the AI model will learn, and eventually we'll be able to come to a solution whereby we'll be able to prevent majority of it. Having said that, ultimately we are in the business of taking risk. Lending is a business of taking risk, so some bit of risk will always be there. But it's all about mitigating risk and lowering risk. You can't eliminate risk. Zeroizing risk is never possible, because that's the business we are in. But can we reduce it using technology? That is the question. So I feel stolen goods being placed, that risk to a large extent can be lowered by using AI-driven sentiment analysis and application score. And this, over a period of time, the model will learn, and over the years it will only become better and better. We come to the third risk, inventory management. Now this is the third risk, where today technology penetration is low. Okay, if we talk about inventory management, typically today the entire process is driven by vaulting being done under dual key custody. You have manual physical audits, you have packet audits where you do a count audit, weight audit, or you open the packet and then audit. Okay, you have strong rooms, vaults are operated typically by dual key, so there is a lot of human factor involved, so human error is always possible. Okay, the whole the secure process is built around people. People built on physical controls, which is people driven. So it's not system driven, it's more people driven. So wherever people driven processes are there are possibilities of controls failing, right? And of course it's time consuming, it's a manual process, right? So doing a packet count when you have 1,000 packets, we know how much time it takes, right? So now in inventory management, what can be done? We use technology here. Now here, if we see how we are going to solve for inventory risk, what are the key risks which we have? First is dual key holder collusion. Now, more or less, everybody uses dual key holder. The vaults have 2 key holders, and risk emerges when 2 key holders collaborate to bypass the security. Now, this could be, I give my key I have one of the key holders, I give my key to my friend, or both of us plan together that, okay, we'll do this thing, and we collude and we open it and we don't make an entry, and whatever we do inside, then nothing is getting caught anywhere. Okay, so can I do that? So things like this. So collusion is always possible between the 2 key holders. What about sometimes it is single person operating the vault. I don't have time, I'm attending another customer, I'll give my key to my friend, he'll go into the gold. Now these kind of things, when it starts happening persistently, either just out of our genuineness we do it, or sometimes there might be pressure to give the key, whatever ways, but single vault operation happens. Whenever the key system fails, that is when typically a lot of risks open up. This could be risks of packets being replaced, it could be risk of packets being removed altogether, So there are multiple risks which open up as soon as this dual key system fails. So how can we use technology to ensure that this system does not fail? Oh. Sorry. So how can we use technology? So first is biometric vault access. Now this is already being done in quite a few organizations where there is a vault which opens only with biometric access of both the key holders. So typically the entry door to the vault will have a biometric key access and the actual vault will be inside where you have dual key to operate it. Okay. So this ensures that both the people are present at the time of opening of vault. It cannot be that just one person was there and one person operated the vault. Both the people are there. It ensures that. Second is centralized OTP authentication. So the vault door will not open by itself. You will have to enter an OTP which is sent by a central authority. Now it could be from HO, it could be from some centralized monitoring team or so on. So whenever you want to access the vault, you do your biometric, a trigger is sent to the central system which will send an OTP, and that OTP you will have to enter, only then the door will open. Now what is happening there, as soon as you do that, automatically there could be a live agent sitting remotely who has started monitoring the CCTV camera inside the vault. All the vaults have CCTV cameras inside. Now someone sitting remotely started monitoring what exactly is happening in the vault and they are having a look. Okay. And it is getting recorded. If there is any red flags, the same will be highlighted. Now when you implement this technology layer, automatically you are eliminating the risk of the vault being accessed by one person or someone doing something inside and not going unnoticed, because someone is seeing what you are doing, and if someone is monitoring, it's unlikely anybody will do anything, right? Because you are being monitored. Now this live agent monitoring, tomorrow as scale increases, it will be difficult for how many agents will be put. So it will be difficult. So it can move to an AI powered analytics, which will be taking the CCTV monitoring recordings and studying them and then giving alerts. Okay, wherever it's required, that it will give an alert, and that is where a live agent will get involved. So with these 4 items, you can completely ensure that your vault access is always happening with 2 people present. With the dual custodians being there, there is a central monitoring also happening. It's not that just those 2 custodians are operating the vault, but you are centrally monitoring it as well to ensure that there are no, nothing, no red flags are raised, and everything is going smoothly, and nobody has the opportunity to do any kind of mischief. Now, coming to packets, the other bigger challenge which happens in gold loan is packets itself getting replaced. Right? We have seen it many a times. Customer came and pledged original gold, and somebody got a copy made, and the whole packet was changed. This is something which has been happening across, or packets itself disappearing. Now, in these situations, one layer of security is this. The second layer in packet itself is some players have now started experimenting with RFID packet tracking. Now, RFID tagging gives 2-3 advantages. First, it's impossible to duplicate, because the RFID which comes as a printout from the system itself. Okay, so you take it from the system and then you put it on that particular RFID. So that system tags it. So you can't allocate a particular RFID to a particular customer. That is system driven. Now, once RFID is put on the tag, you typically have an RFID gun which comes, where let's say typically in a tray, if I have get 500 packets, I just have to run the gun on the whole packet once. Okay. And automatically the gun will read which all packets are there. Okay, it doesn't, even if the packets are kept, typically barcode can also be used, but then they need to be aligned. Here, even if they are unaligned, it will read and say that okay, there are 500 packets, not just 500 packets, which all packets, it will give a list, match it off with the inventory list, and show if there are any packets excess or if there are any packets missing. So the whole audit process becomes much faster, much easier, and can be done more regularly. especially in higher volume branches. So, this is one technology which is coming in. Along with this RFID, there are RFID gates also available, which can be put outside the vault area, I mean to the entry to the vault area. So if any RFID packet is being moved in and out, it will automatically get tagged that these RFIDs came inside and this came outside. And end of day with the report of closures or releases of the day plus disbursals of the day, you can do a recon and see that has the exact number of packets gone. Or if there is no corresponding entry, then you know, okay, this packet has been moved out and there is no corresponding entry for it. So this kind of technology is also available. Now the question is, while all this technology is available, there is an aspect of cost, right? So that's not something that we are discussing today, but end of the day, the cost has to be something which justifies to the business. But what we have seen, if you have seen over the years with technology, what can happen is cost of technology can come down drastically. You look at anything, right, from the cost of mobile phone charges. Okay, when they came, it was like 30 rupees incoming, 60 rupees outgoing, and so on. And today it's like all free, right? Be it the cost of data, right, or any other technology you take LED TVs or OLED and so on and so forth. Any technology which comes quickly the cost comes down. As it's used more, the cost comes down. So it's only a matter of time, and even as we speak today, there are a lot of both NBFCs, banks out there who are running various kind of pilots. Some people are using XRF machines for doing audit. Okay, they have put it in high volume branches and are doing it exclusively for you. They're exclusively using it for audit purposes. So they are doing that. Some have replaced, some are using it alongside with their existing valuer, and some have altogether replaced it and are just using the machine to do the valuation. So everybody is at a different learning curve, but as we go ahead, I think over the next 2 to 3 years, we are going to see a lot of this technology come into the gold loan lending business and fill the gaps which currently are present in terms of technology. Otherwise, today a loan onboarding, right from the time when he gets the OTP message for OTP authentication to doing e-sign, the entire process is already digitized, already automated. So things left now are the gold valuation part, which I think soon technology will fill that gap, and some bit on the stolen gold identification and on the inventory management part. So there are some pieces of technologies which are there in all these three. It's a matter of time before some lender or the other, some player in the market will start using it more, and everybody else will see that okay, this works, and then suddenly you will have everybody going for this technology. So that's it from my side. Thanks a lot for spending your time, and if you have any questions, open to take them.
Yeah, thank you so much, Sandeep, for such an insightful session. Now we are open for question and answer. We do have a few questions, and meanwhile, if you also the audience has any question, they can put it in the Q&A section. We will be taking them up. The first question that we have, it asks, from your experience, what's the first practical step lenders should take if they want to move towards automated gold valuation without disrupting the current branch operations?
I think the best way to do it is you pick up a high volume branch, okay, and you put 1 or 2 machines, identify 3-4 branches, and put few machines there, and probably like do audit or do maybe second valuation there, where you're doing first valuation, you're doing your second valuation may be done through machines. Or for every loan that you're doing, you just add one more layer of valuation. It might take some bit of time, but selectively you start doing that. Once you start using it and getting data, only then decision making will happen, right? Because without data, it's a good idea. But once you have some machines in place, some things being done, you will start you will have data. And the more data you have, the more comfort you will have on whether it makes sense to replace it or not. I'm not saying it's going to happen overnight that suddenly if I have, let's say, 1,000 branches, I'll go and replace it in 1,000 branches. But maybe the next 5 new branches that I'll put these machines and see how it works. hope I have answered your question.
Yeah, right, sir. Thank you. Thank you for answering them. We have one more question. This one is from Anand from RAR Fincare. Are there any vendors offering assessment machine integration with LOS? And are there any vendors who are offering vaults with three-factor authentication?
Sorry, the second question I didn't get.
Are
Are
there
they
any
offering
vendors offering vaults with three-factor authentication?
voice? Okay. So to answer your first question, all these machines. So when I had done my research and gone through these machines and spoken to their companies, so all of them have API integration capabilities. Whichever LOS you have, they can integrate and transfer the data from their system to your system in a machine readable format. So you will get the data. Okay, so those things are available. It's not a ready API that you can consume. It's something which probably needs to be developed together. So those that's available. Voice as an authentication mechanism is already being used at call centers. I mean, I think 2 or 3 of the calls that I get, my authentication through voice is available. So I don't see any reason why a vendor would not be there. Personally, I have not used voice authentication till date. But yes, I'm sure vendors are available and you can reach out to them and they should be able to give you a solution. And I think with now more and more transactions happening on mobile, I was reading somewhere that today I think almost 50% of the transaction for Muthoot happens through mobile, their payments. More and more transactions happening through mobile. Voice could also be a good layer to ensure that it's the same customer who is availing the, say, a top-up loan or something.
Okay, thank you, sir. I hope that answers your question. Now we have another question. How do you see lenders building trust in machine-led gold valuation, like both internally with branch staff and externally with customers? How do they build trust in machine-led gold valuation?
So I think here the bigger challenge is more with the internal branch staff than external customers, because from a customer's perspective I think it is a more positive thing, because their gold is not being there is when you're rubbing the gold, end of the day there is some destruction happening. Here it's not happening, and a machine is doing it, so customer will never have that thought that okay, maybe I'm getting lesser amount. Okay, so that thought will not be there. Whatever the machine is saying. But at the same time, somewhere from a branch perspective, it might happen that you have a customer who is like a 10-year-old customer of the branch, and you have that comfort level where you can probably give him slightly higher amount, but now you don't have that leverage, because whatever the machine shows the same, it will go. So in the short run, yes, there will be some friction. Some cases you might lose. Someone might say, I'll go next door and they're not using machine, they're giving me more amount. Possible. But ultimately, we have to think more in the long run. And that trust over a period of time has to be built. Okay. So if you have faith in the overall, the process, okay, and you kind of, from a customer's point of view, I think the trust will be very easy, because the customer knows, it's a machine which is evaluating, so he has that belief in it. So as long as he sees consistency, I think it's fine. Tomorrow, however, if let's say a machine starts reacting, same gold one time is 18, one time 20, and one time 17, then there is a problem. But then you need to go back to the base technology and evaluate why that is happening. Okay. So having said that, I think customer trust will be built easier. Employees trust, yes, it will be a challenge, but somewhere when new technology comes, early adopters always will go through slightly more issues in terms of moving to the new technology. But at the same time, they will have advantage, because they will be the ones earliest in the market, and that will give them the benefit. Because imagine this, because a machine is there, if your ability to turn around customer increases faster, and the whole process is without damaging the gold ornaments, and the word of mouth of that will also spread, which will in turn increase your branch business. So yes, I would not say it's not a challenge. It is a challenge, but I think with it can be overcome. It can be overcome together.
Okay, so next question we have. Sentiment analysis and behavior AI are very compelling ideas. And how do you balance false positives so genuine customers aren't, unfairly flagged?
Well, yeah. So see, with any kind of technology, risk of false positives are always there. Okay, it's an inherent risk. Now, obviously, so you can't be 100% dependent on technology. Okay, you will always have certain factors where you will give, say, for example, with the sentiment analysis, we have to put application score also. If my app score is very strong, say for example, if he's an existing customer, I have like 5-year track record, no delinquency, nothing, and then sentiment analysis shows he's pledging stolen gold, maybe I'll give the customer a benefit of doubt. Okay, so it will always be a combination of something which is more reliable, and end of the day, see, a technology is there to help us, right? We can override it. There will always be deviation matrices and deviation options available where you can take deviation. Then you can see how that loan is performing over a period of time, and then evaluate, know whether the technology was right or wrong. Okay, so it will never be 100% foolproof. You cannot eliminate the risk. You can only reduce the risk or mitigate it. So my sense, even when you deal with false positives, is you always look at what other data is there which mitigates your case and says that, hey, we should be giving a loan to this customer, and always have a deviation option available so that you don't miss out or don't lose out on customers just because the machine is saying you should not give loan to this customer. So you eliminate false positives by using these two levers.
Okay, moving on to the next question now. This is about, if you look 3 to 5 years ahead, what does a best-in-class gold loan branch look like in terms of technology and control and customer experience that it gives out?
So I would divide it into two parts. Let's talk about customer experience. If I talk about customer experience, in 3 to 5 years, I walk into a gold loan branch. Okay, whatever transaction I have to do, I should be able to do it within 10, 15, maybe max 20 minutes. Okay. Anything more than that, if I'm sitting there out of my choice, say for example, I enter a gold loan branch and somebody's pitching me some health insurance and I want to buy insurance and I'm interested in knowing about the product, that's a different story. Okay. That is okay. But apart from that, my transaction itself should not be more than 10 to 15 minutes. And I should only be going into the branch because I have to deal with my gold. Either I'm going into the branch to keep my gold because I want to, take a loan, or I'm going in the branch to renew my gold loan. I'm going there for renewal process, maybe once in a year or once in 2 years, or maybe third, I'm going there to release my gold. Unless I have to deal with my gold, I should not be walking into the branch. That's the most ideal experience. Everything I should be able to do on my mobile, on internet banking, on WhatsApp banking, whatever. But I don't need to go to the branch otherwise. These 3 reasons, yes, I need to go to the branch. Okay. Within the branch, as soon as I come in, I envisage a technology that there is and I'm talking 5 years ahead. Suppose there is a webcam kind of a thing there. It automatically scans my face, and the front desk person or the gold loan officer sitting there gets an alert that, okay, Sundeep Shenoy has walked into the branch, and I get greeted by my name. Hi Sandeep, so how are you? Yeah, what brings you here? How are things, and so on and so forth. So first there is a surprise, and it's a pleasant surprise that the person remembers me. I don't know the technology is being used, right? From there the conversation starts, and the whole gold loan process itself should just simply be I do either OTP or biometric authentication. Once I have done that, all the credit checks happen, my gold is checked, and I am told this is the maximum amount I can get, or this is the range of amount, I can choose the amount, and that's it. I say, okay, fine, done. I do another OTP I get or biometric I do, and e-sign has happened. And money is getting transferred into my account. Gold has already gone in. So the whole process should not take more than maybe 15 minutes. 10 to 15 minutes, that's the time frame I would say. Similarly, for a release process, I would have already made the payment before I walk in, because I can see the foreclosure amount on my app. I have made the payment. I just walk in, I just show the QR code there, They scan it, they get a confirmation it's done, they go inside, bring the packet out. Maybe it can be two-step also, where I say I'm coming tomorrow and they already take the packet and keep it out at a smaller locker outside. Maybe that's also possible. So release also does not take more than 10 minutes. So this is the kind of branch I envisage, where entire process is automated. I'm only going because I'm handling things with gold. I have something to do with the gold. Okay. And otherwise I don't even need to go. And wherever it is bank branches, I think one other thing which can happen is I don't need to take the gold out. I just need to go there, shift the gold into my locker. There's a locker allocated to me. I just move the gold to my locker. Whenever I want a loan, I can come back again, take it from locker, give it to the gold loan team and get it. So that would be my experience. 3 to 5 years down the line, a gold loan branch should be spending 20% of their time handling gold loan and 80% of the time probably cross-selling to the customers.
Yes, sir. Okay, so we have one more question. Can you also wait in terms of what kind of modern technology is available out there in terms of making doorstep delivery of gold loans secure, if that's even something that we are gonna continuing, people might continue with?
So see, doorstep delivery of gold loan was something which we already saw a lot of fintechs pick up and scale up over the last 2-3 years. Okay, last 5 years. The guys like Rupee, India Gold and all, they have perfected it. And there are a lot of technology controls available there. There is GPS tagging. You have pouches with GPS tags, whereby you can know exactly where the gold loan packet is. The entire process used to be done under a kind of a mobile phone used to be used like a CCTV, and the whole process was recorded, live recording was done. So there was a different set of technology available. But now with the new RBI guidelines which are going to come, doorstep gold loans has become, is not allowed now. For all practical purposes, RBI said that if you want a gold loan, you have to come to a branch. So the bank can't go to the customer, the NBFC can't go, nobody can go and do doorstep. The door has to be handled in a branch of the regulated entity. Now, given that doorstep model itself currently is not available, if tomorrow there are any changes in regulation and they allow doorstep model, then yes, I'm sure it's a matter of going out and figuring out how you can, what all different options are available. Like even the XRF machine, a portable version is also available. Okay, so it's about evaluating the options and then making it fit, right? There will always be some challenges where you might say that, okay, we are able to do these 15 types of items we are able to do in doorstep, but maybe any item which is apart from these 15 we can't do. Okay, where let's say suppose kamarband kind of item comes, which are large, right? Those probably doorstep is not suitable for it. That let them come to the branch. But if it's just giving 1 chain, 2 chain, and we can do it, right? So those kind of but for doorstep, those technologies will have to come. But as of today, doorstep is something which RBI does not permit. So building that into your product map doesn't make sense.